Welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, I'm not going to share my screen, not going to talk about too much. I am going to allude a little bit to the banking failures and going on, but today what we're focused on is USDC and stable coins and how a coin loses its peg to the $1 mark that it's trying to be stable against. Now, first off, I want to talk about stable coins. It's a bad name. Nothing stable about the dollar. We've been over that many times. The dollar is garbage. All fiat currencies go to zero. If you don't know this stuff, please watch some of my older videos or ask questions and try to come up to speed there. But the dollar is garbage. All fiat currencies go to zero. Okay, there's nothing backing a fiat currency except faith in the government or the issuer. That never lasts over time. So USDC supposed to be tied to a dollar. It started to go away from $1 a couple of days ago, right before the weekend. Why did that happen? Well, it was because Coinbase and Circle, the companies that are behind, one of the main companies behind USDC, there were rumors of how much they were exposed to the banks that were going under last week, which is Silicon Valley Bank in particular. Silvergate, yes, but Silicon Valley Bank had assets that were tied to Coinbase and Circle, and because of that, they thought that those assets would be, gone, which would be a problem for USDC to fund enough to be really solidly backing that USDC pegged to a dollar, because there's so many USDC that's already issued right now. I'm gonna pull that up as I'm talking here. I'm just curious as how much USDC there is right now. I'm going to pull up CoinMarketCap and take a look. USDC is a market cap of 40 billion. So that means there's about 41 million USDC. And right now it's at 99 cents. So it's basically pegged back. So it's back now, which is good. But it was down in pushing 90 cents or so Friday night because everybody was nervous that USDC may go under and it's not stable against the dollar because of the funding issues, because of the bank that was tied to Circle and Coinbase, which goes back to Silicon Valley Bank. So how does a stable coin lose its peg? It really gets back to how it manages its assets and ties things to how it releases new coins or how it gets structured. Now, we had Luna 6 months ago that was completely susceptible to a meltdown, which happened. But USDC is supposed to be more stable than that. However, we have a loss of trust or confidence in the entity that issues whatever the asset, whatever that is. If you have loss in faith in the government of England, then you lose confidence in the pound, right? Because they issue. You get the idea. If let's just say I lose faith in Tesla or Elon Musk, then the Tesla stock share price should be going down to reflect that. If that becomes the common belief that, this company's going under, the stock price is going to go really far down. So it's a confidence vote. So now people lost confidence in USDC because they thought that their assets were going to be gone, or a portion of them were going to be gone with the meltdown of Silicon Valley Bank. Now, that's proven to not be the case because there has been an intervention that's been mentioned over the weekend by the U.S. government or the Federal Reserve or the Treasury or whomever it is that's stepping in to intercede and take. And this is brand new. That's happening right now. It's never happened before. The Federal Reserve is meeting on Sunday to talk about it, see what they're going to do. But they are interceding, taking over these banks, and they're assuring that they're going to work to make everybody whole. But this could be very much a possibility that this is to eat up the FDIC insurance, which is very lightly held. And that's probably another video I need to make. But I could talk about FDIC insurance here, for example. Everybody has a false sense of security created by the FDIC insurance that you see the sticker in every bank that you go into. Deposits up to this amount are FDIC insured. It used to be $100,000. Now it's $250,000. That's per account and per name. So, but in these banks that were over leveraged, the Silvergates and the Silicon Valley Bank, they had 80% or more of their accounts were over $250,000. So there's a lot of exposure here beyond FDIC reserves. But theoretically, with the FDIC, you should be safe to a certain amount, which is used to be 100, now it's 250K. The problem is that if everybody tries to file or get that insurance, FDIC only they only hold like 2% of what they should hold. Like I don't know what the number is. It's in the trillions, but let's say it's $40 trillion. I'm gonna make it $10 trillion because I don't know the number. If all the assets by banks held with FDIC insurance, all the deposits at 250,000 or lower, added up to $10 trillion. Well, in that account would probably be about $200 billion. So if you had that full amount, if you had $250,000 in the bank and thought you were completely protected, you're probably only getting about $5,000, that $250,000. Not to scare you, but just to inform you that it's underfunded. And if all the banks go insolvent at once, well, FDIC can't cover it unless they just print money to infinity, print currency to infinity, which will add to more inflation, devaluing all the dollars that you want back anyway. And it's going to be a giant, giant mess. But that could be happening. But since the U.S. government and the financial system that we have in place stepped up and said, hey, you know what? We're going to step in because we don't want to see these banks go under. And Silvergate was more of a crypto bank, but now that you had Silicon Valley with all these venture capital firms and all these tech firms that had lots of assets exposed, this is the largest bank failure since Washington Mutual. I think that's the right one, but that went under in 2008. This is one of the largest banking failures in history. So there's a lot of assets under management. They're just stepping in here to say, hey, we can cover this and we'll make everybody whole. But how are they actually going to execute that? Now, the market's reacting and USDC is going right back to $1, which is great. That's great for crypto. But between what's happening with Silvergate, what's happening with USDC, and with the government intervening, this is all screaming that we are heading towards a lot of intervention and this problem, reaction, solution, right? So problem, we have banks going under. Reaction, government's meeting furiously to try to figure out what to do. They already have a plan in place for this. The CBDCs are probably going to be launched a lot sooner than you expect. And I wouldn't be surprised if they actually start to do remittances or whatever they're going to, in lieu of dollars, they may give you CBDCs for these higher, larger accounts. That could be going on next. There's a lot of different philosophies going on out there. I heard an interesting one about smaller regional banks may be in more trouble than the bigger banks. But I don't want to get anyone scared. Be prepared now. Just sprinkle your money around in different accounts. Don't leave too much into the banking system. Not financial advice, but you can see what can happen here. So it looks like the stable coins probably, it's great that USDC looks good, but this is another inkling that we're heading towards the government saying that these stable coins aren't stable enough. CBDCs to the rescue. Here you go, everybody. Here's an airdrop of some CBDCs to get you started. The first bite is free, and then they're off to the races with central bank digital currencies. So what are your thoughts? Do you like did I explain that well enough about the DPEG? Are we back on track there? Do you see how it could play out, how I could say? I look forward to reading all your comments. But for now, I'm going to close the drawer in the bureau, say follow Leader one more time. I will talk to you soon. Take care.